What is Bitcoin? Bitcoin is a cryptocurrency created in 2009. Marketplaces called Bitcoin exchanges allow people to buy or sell Bitcoins using different currencies. Bitcoin is a new currency that was created in 2009 by an unknown person using the alias Satoshi Nakamoto. Transactions are made with no middlemen, meaning no banks. Bitcoin can be used to book hotels on Expedia, shop for furniture on Overstock, and buy Xbox games. But much of the hype is about getting rich by trading it. The price of Bitcoin skyrocketed into the thousands in 2017. Why Bitcoin? Bitcoins can be used to buy merchandise anonymously. In addition, international payments are easy and cheap because Bitcoins are not tied to any country or subject to regulation. Small businesses may like them because there are no credit card fees. Some people just buy Bitcoins as an investment, hoping that they'll go up in value. Buying Bitcoins buy on an exchange. Many marketplaces called Bitcoin exchanges allow people to buy or sell Bitcoins using different currencies. Coinbase is a leading exchange, along with Bitstamp and Bitfinex. But security can be a concern. Bitcoins worth tens of millions of dollars were stolen from Bitfinex when it was hacked in 2016. Transfers. People can send Bitcoins to each other using mobile apps or their computers. It's similar to sending cash digitally. Mining. People compete to mine Bitcoins using computers to solve complex math puzzles. This is how Bitcoins are created. Currently, a winner is rewarded with 12.5 Bitcoins roughly every 10 minutes. The anonymity of Bitcoin. Though each Bitcoin transaction is recorded in a public log, names of buyers and sellers are never revealed, only their wallet IDs. While that keeps Bitcoin users' transactions private, it also lets them buy or sell anything without easily tracing it back to them. That's why it has become the currency of choice for people online buying drugs or other illicit activities. Bitcoin's future in question. No one knows what will become of Bitcoin. It is mostly unregulated, but some countries like Japan, China and Australia have begun weighing regulations. Governments are concerned about taxation and their lack of control over the currency. Is Bitcoin a good investment? In its decade-long history, a collective insanity has sprouted around this new digital asset, causing an irrational gold rush across the globe. Whether this cryptocurrency will eventually prove to be a great investment or just a passing storm remains a mystery. That thrill, the promise of instant riches or ruin, has a lot of investors gun-shy, as others wonder how to reap big off a Bitcoin investment. Simply put, is investing in Bitcoin risky? Similar to any speculative investment, buying Bitcoin is risky business. It is still very much a gamble. This cryptocurrency carries some well-known risks. The price could drop precipitously, and one online hacking or crashed hard drive incident can wipe out an investor's stash of Bitcoin, leaving you with no recourse. Bitcoin has seen dramatic run-ups in price followed by some painful crashes, but has consistently retained a significant portion of its previous gains every time it plummets. Since its inception, Bitcoin was the first digital asset to beget the current ecosystem of cryptos. For quite a while, it grew an underground following of investors who saw its future as a possible replacement to the physical monetary system. The decision to invest in Bitcoin comes down to your appetite for risk. Where to invest in Bitcoin? You can use an online broker to invest in Bitcoin. Investing in Bitcoin is similar to investing in stocks, except it is far more volatile because of the daily swings in Bitcoin. Here are the steps to invest in Bitcoin. Open a brokerage account with a company that allows crypto investments. Deposit funds into your brokerage account. Buy BTC. Later sell the crypto for a gain or loss. These steps, however, depend on the exchange or trading platform you're using. Here are some top brokerages where you can invest in Bitcoin. Advantages of Bitcoin investments. The overwhelming performance of Bitcoin, as a currency and investment, has attracted traditional and institutional investors alike. Bitcoin as an investment tool provides you with the following advantages over traditional investments. Liquidity. Bitcoin is arguably one of the most liquid investment assets due to the worldwide establishment of trading platforms, exchanges and online brokerages. You can easily trade Bitcoin for cash or assets like gold instantly with incredibly low fees. The high liquidity associated with Bitcoin makes it a great investment vessel if you're looking for short-term profit. Digital currencies may also be a long-term investment due to their high market demand. Lower inflation risk. Unlike world currencies, which are regulated by their governments, Bitcoin is immune to inflation. The blockchain system is infinite and there's no need to worry about your cryptos losing their value. New opportunities. Bitcoin and cryptocurrency trading is relatively young. New coins are becoming mainstream on a daily basis. This newness brings unpredictable swings in price and volatility, which may create opportunities for massive gains. Minimalistic trading. Stock trading requires you to hold a certificate or license. You must also go through a broker to trade a company's shares. Bitcoin trading, however, is minimalistic. Simply buy or sell Bitcoin from exchanges and place them in your wallet. Bitcoin transactions are also instant, unlike the settlement of stock trading orders, which could take days or weeks. Disadvantages of Bitcoin investments. Bitcoin may be the future of monetary exchange, but it is equally important that you are aware of the concerns surrounding cryptocurrency investing. Here are some serious risks associated with Bitcoin investments. Volatility. The price of Bitcoin is always rippling back and forth. If you happened to buy Bitcoin on December 17, 2017, the price was $20,000. Weeks later, you couldn't sell your investment for more than $7,051. The Bitcoin market is constantly changing. With such an unpredictable market, you can hardly get a good return on your investment. To avoid huge loss, keep a close eye on the market. Threat of online hacking. Hacking is a big threat facing a Bitcoin investor. Bitcoin exchanges let you buy and sell your cryptos using a mobile app or website. This leaves them susceptible to hacking and theft of all your investment. Besides, Bitcoin held on exchanges isn't insured by the FTC. Little or no regulation. The Bitcoin market currently operates with no major regulations. It isn't taxed and governments have no clear stance on it. As a result, you could stand exposed to fraud and malpractice. Limited use. Bitcoin is currently only accepted by few online merchants. Many companies don't also recognize Bitcoin as a legitimate exchange, making it an unfeasible investment vessel. Besides, there's only a fixed supply of Bitcoin, 21 million. Wallets can be lost. If your hard drive crashes or virus corrupts your wallet file, you lose your Bitcoins. You can go from a wealthy to bankrupt investor within seconds, with no way to recover. Is Bitcoin the future, really? Price volatility isn't all you need to worry about in this hyped-up market. Since Bitcoin largely exists outside government regulation, it poses more risk than dealing with government currency and other asset classes. However, it isn't hard to sell or buy and you can make a limited amount of purchases. If you decide to dabble in Bitcoin, classify it under your high-risk, high-reward portfolio. You can reap huge profits in the short term and lose heavily if the value drops. Understand that Bitcoin is a relatively new technology, and even futurists aren't sure about its fate. Use the philosophy, buyer beware, when investing in Bitcoin.